Hello guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. China's August gasoline export nearly doubled from a year ago. China's August gasoline export rose 97% from a year earlier. Custom data showed on Sunday as refiners took advantage of rich export quotas amid faltering domestic demand. Gasoline shipments were at 1 million tons last month, while volumes for the January to August period were 30% lower than the corresponding period last year, according to data from the General Administrations of Customs. Diesel exports were at tons up 51% from August 2021. On healthy export margins, export for the January to August period totaled 3 million tons, down 78% on the same period last year. Export of jet fuel in August declined 50% from the same period last year to tons. However, year-to-date shipments were 4% higher than the year before at 5 million tons. Analysis and traders had expected China's export of gasoline, diesel, and jet fuel to rebound in August to near the highest for the year after Beijing issued more export quotas in June and July. China topped up with a fourth batch of export quotas of 1 million tons for this year, taking the total so far this year to 24 million tons, still a third lower than 2021. The custom data also showed that China's liquefied natural gas, or LNG, import in August fell 28% from year earlier to 4 million tons. Shipments during the first 8 months of the year were also down 21% from the same time a year ago at 40 million tons amid high spot prices of the super chilled fuel. Pipeline gas import last month rose 90% on year to 4 million tons. The data also showed year-to-date import volumes were up 10% from year earlier to 30 million tons. Pipeline gas import last month rose 9%. Table below shows trade details volumes in million tons. Export August change January until August change. Gasoline, diesel, jet fuel imports August piped gas. Oil prices up after Basra spill but log weekly decline. Oil prices rose slightly on Friday as a spill at Iraq's Basra terminal appeared likely to concern crude supply, but remained down on the week on fears that hefty interest rate increase will curb global economic growth and demand for fuel. Brent crude futures settled at barrel up 51 cents, while U.S. West Texas Intermediate crude futures settled at both benchmark were down by nearly 2% on the week, hurt partly by the U.S. dollar's strong run, which makes oil more expensive for buyers using other currencies. The dollar index was largely flat on the day but up for its fourth week in 5 weeks. In the third quarter so far, both Brent and WTI are down about 20% for the biggest quarterly percentage decline since the start of the COVID-19 pandemic in 2020. Oil exports from Iraq's Basra oil terminal are being gradually resumed after they were halted last night due to a spillage, which has been contained by Basra Oil Company said. The spill at the port, which has 4 loading platforms and can export up to 1 million barrels per day, drove up prices on the prospect of lower global crude supply. That definitely threw a scare into the market because the initial report was that those barrels were going to be out of the market for some time, said John Kilduff, partner at Again Capital LLC in New York. Investors are bracing for a large increase to U.S. interest rates, which could lead to a recession and reduce fuel demand. The Federal Reserve is widely expected to raise its benchmark overnight interest rate by 75 basis points at September 20 until 21 police meeting. The increasing likelihood of global recessions, as underscored by the recent renowned downturn in equities, could continue to provide a limiter of upside prices possibilities into next month and possibly beyond. The market also was rattled by the International Energy Agency's outlook for almost zero growth in oil demand in the fourth quarter, owing to a weaker demand outlook in China. Maybe that's all from me. Don't forget to like, comment, share, and subscribe. Thank you.